Hey everybody, what's going on? It is James here with Crypto Common Sense, aka 3 Peaks Trading, and in this video, I want to do a quick Bitcoin update. It's been, about a week or so since my last video. In that video, I talked about the fact that Bitcoin looked like it was due for some type of correction or pullback, and I laid out a couple of levels to keep an eye on. Now, the charts that I often trade and the charts that I often show are different from a lot of charts out there because I trade a lot of relative strength, and not relative strength in terms of RSI, but relative strength. I try to watch assets and how they're performing versus the market sector that they're part of. And like I've been saying for a number of years now, I consider cryptocurrency to be a tech asset. And so I always want to keep an eye on its value or its movements versus the tech sector. And the easiest way for me to do that is to compare it to the NASDAQ or an ETF for the NASDAQ, which is the QQQ. Okay, I just rambled for 3 or 4 minutes, so I'm just going to cut that out. Probably going to be a little bit of a weird, transition here, but I'm going to save you the time. Who knows? All right, we're going to look at this chart here. This is a total versus QQQ chart. In the last video, I talked about how this was a line that I could see, it coming down to and then bouncing off of. And that's literally exactly what happened. It came right back to that level of support, testing the top of this range, and so far it has bounced off. So absolutely nothing surprising about that. If we look at Bitcoin versus the QQQ, same thing. We had this range back here. I talked about this range, talked about how it could be retested, fell out of the bottom of this, kind of flag-like shape, came down, retested it, bounced off of it. So far, nothing surprising. These are all things I covered in that previous video. What I would say in this video is just a few things to keep an eye on. This is neither bullish nor bearish, just simply things to keep an eye on. The biggest thing that concerns me right now is actually this 19-week moving average. Now I'm going to turn Trend Titan off just so the labels aren't there. Obviously, super happy with this trade that it put up there. Sell signal, just to be clear, sell signals on Trend Titan are not short signals. They're actually just closing signals. So they kind of match up with the buy. So excellent trade, all good, right? But it doesn't mean that I'm suddenly going to short this and try to write it down. So when we look at this, we got the simple 19-week moving average. Now, this is a moving average that has been somewhat prophetic in Bitcoin's history. And I used to talk about this a lot when I focused mainly on trading Bitcoin. What concerns me so much about this is that our 19-week moving average has started to curl down, and we're now moving back toward that average. And historically speaking, which is not a guarantee, but historically speaking, when it starts to curve down and it gets retested, it typically acts as a bearish retest, and it tends to be a great place to get out of the market before downside. Now, it doesn't mean Bitcoin going to zero or anything like that. What it means is downside. It could be a correction, maybe down to 61.8 fib, for example, maybe something less, something worse, who knows? It doesn't really give a target. It's just kind of a bearish sign. So this is something to keep an eye on. If you're a bull on Bitcoin, you really want to see bulls like take this level out and kind of regain that level of support. But if we look back historically, I kind of show you what happens here. So if we go back to the 2021 cycle, right, it started to curl down, came up, broke right through it. That's what we want to see right now if you're bullish on Bitcoin. You want to see it come right through that, and then even have this beautiful bullish retest before another pump up. Okay, that's what you want to see. What you don't want to see is something like this, where it goes through it and then fails to continue, because that's often a sign of downside. Look, right there, great place to get out, right? You'd have been getting out around 44,000 before it dropped down to just over 15,000. If we go back in the previous cycle before that, we can see that started to move sideways, curl down just a little bit, and a little sideways movement. And this was in the summer of 2019. It peaked, bearish retest, and more downside, okay? And ultimately it went this low, but this was the actual move off the 19-week, okay? So from around 9,500 or so down to about 7,000, so about a 30% drop there. If we look back on 2018, once it started to curl down, not over here, but over here, it's curling down, retested, and again, that was up around 9,900 to 10,000 and fell from there all the way down to about 3,100. So historically speaking, and let's put this on a Bitstamp chart real quick because it has more history. Historically speaking, let's go back to the previous bear cycle. What did I do? Why am I not getting 2013 on here? Where's my 2013? This is weird. I'm on Bitstamp. Did Trading View do away with that old data? That's not cool at all. Okay, well, we'll just go over to this index. That's weird. Anyway, we'll go to this index. So again, here, curling down, it did have a false break above it, but it couldn't get any momentum. And again, down it went. Even had a retest over here in November of 2014, around $450 before falling down to about $160. Now, I know some people are like, $450, that's insane. But that was like a 67% drop. Look at this, 64.96%, okay? And then we even have a case back here in 2011, which, you know, by the time it retested, it had already been in a bear market. It had already fallen 70, 80%. So this is a little bit different scenario. But essentially what you would just want to watch for is, it's like any level of support or resistance, in this case resistance. There's no guarantee that it holds. Okay? There's no guarantee just because it comes back up to it, it's going to hold and then Bitcoin's going to move down. It's just you want to be aware of it. If you come up to that level and we start seeing, for example, a big wick left behind where bulls are trapped above that level. You know, we see a candlestick, for example, like this candlestick, and most of it, say it looks something like this. If most of the wick is above that level, then what you have is you have trapped bulls, okay? Trapped bulls provide liquidity for bears to push the market down. All right, just like in reverse, when you have a tail sneak below a level, you have trapped bears, which push the market up. Kind of like right here, you get trapped bears, okay? And these bears weren't trapped underneath a level as far as a moving average. These bears here were trapped underneath this range low. All right, so they got, you know, they got in a hurry. They tried to short it. Oh, it's taking out this range low back here. And they got fooled. They got trapped. And that provided liquidity for the market to move up. So this level of support and resistance is going to work exactly like a horizontal level. Right? They all work the same way. Same thing with trend lines. The only difference with a trend line, by the way, is trend lines are very, very sneaky because trend lines change depending on how you draw them. Okay? Let me give you an example of this real quick. Even though we're not talking about stocks in this video, I want you to understand this. See this chart? This is Tesla. If I show you this chart and I show you this trend line, you're like, holy cow, that's amazing. I'm going to short Tesla, right? I'm going to buy puts on Tesla. And maybe that's a good call. Except you need to be aware of, okay, this is a log chart. What happens if I change this to a regular chart? Oh, well, I've suddenly cleared that level. Which one is right? Don't know. Don't know which one's right. And we won't know until the future when we can look back and say, oh, yeah, it was so obvious. See, the thing is, trend lines, that's one reason I'm not a big fan of trend lines. I like horizontal lines because they're not up for debate, right? We all draw them the same way. Horizontal lines are horizontal lines. I like moving averages, you know, well-accepted moving averages, because we're all looking at the same moving averages, especially like the 200-day moving average, 200-week moving average, etc. I don't like trend lines as much because I can draw this way, and it looks like this is super bullish. It's broken that trend line that, you know, extended back a few years. I can put it on a long chart, and it looks bearish, like I'm coming up to resistance. I can put it back on a regular chart and look at a different time frame, like a 12-day time frame. And now when I connect this, watch this. I put a ray on there. I go from my first point to my second point. And again, it looks like it was actually failing at resistance back here. But yet, if I put on a weekly chart and I draw the very same points, it shows the line way down here. Okay. I'm not hating on trend lines. I think they're useful and I do trade them, but I just don't trust them near as much as I trust horizontal lines and moving averages. Okay. And again, well-accepted moving averages. Sometimes I'll see something from a trader and they're like, oh, I've discovered this secret moving average. And I'm like, that's not how those work. Moving averages work because a lot of people are trading them. They're self-fulfilling prophecies. Okay. So let's jump back over to a daily Bitcoin chart. We can see here that it was testing the 200, left behind a couple of wicks, was looking a little bit sketchy, but then found the to push through. So now we're coming up to that 50-day moving average, but it's curving down. So same thing as the 19-week. We want to see bulls reclaim that as a level of support. So rather than being resistance, it becomes a support level that we can move up and off of. Oh, I got a buy alert. So again, this video is about Bitcoin, but I just think it presents an interesting opportunity to talk about this. If you look at this right here, whether this is a winning trade or losing trade, I won't know until, obviously it plays out. But see what's happening down here? See how this is, got this tail left behind. So there's demand down there. And if we pull that over, right, try to get it as straight as I can. In fact, here. See that? All that demand, and when this tail goes back down in that demand zone and then gets bought up like that, that's confirmation that there's demand. And if we want more confirmation, we can put volume on there. And we see this big spike. Now, a lot of courses and stuff will tell you that big spikes in red volume are bad. It's bearish. That's bullshit. These colors don't mean anything, guys. They don't mean anything. So when you're out there, you're taking a course, or when you're watching a video from somebody, or when you're reading some website, these colors don't mean anything. This is not quote unquote sell volume or quote unquote buy volume. It's just volume. The reason it's red is because the candle closed lower than it opened. That's why it's red. A lot of these people were buying, a lot of these people were selling. It's just volume, okay? High volume like this with a big tail is actually additional confirmation. That's what it is. It means there's a lot of people participating. It means there's a quote unquote battle fought, and it's actually a good sign. I don't care what color it is, all right? It's like back here, if you see this and you're going by all this nonsense about the color matters, then you're going to think this is bearish because look at this huge, quote-unquote sell volume. Oh my gosh, all those sellers. I got to get in my short position. But look what happened. If you shorted there, you were simply out of luck because the market turned right back around. A high sell volume like that is indicative of capitulation. It means that one side capitulated. And when one side capitulates, the market normally goes that way. So if bulls capitulate, which is what happens in a case like this, the market typically turns around and goes right back up. If bears capitulate, the market typically turns around and goes right back down. If you want a perfect example of this, since this is a Bitcoin video, all you have to do is go back and look at 2020. If you go back and look in March of 2020, the largest single quote-unquote sell volume week ever in Bitcoin's history. Oh, nope, sorry, there's one back here. One of the largest ever right here was literally the best time to buy Bitcoin in the last 4 years, right? 4.5 years. If you bought on the close of that candle, you're buying Bitcoin at $5,343. But if you were listening to the volume about all this nonsense about, oh, high sell volume is bearish, then you sat on the sidelines, right? Same thing here, huge sell volume. Yet I'm pretty sure you'd have been okay getting in Bitcoin around 35 before it moved to 70, right? Here, huge sell volume. I'm pretty sure you'd been okay getting in around 16,000. Now, here there is huge sell volume and it kept going down. Here there's huge sell volume and it kind of ground sideways a little bit. So it's not a magic bullet. It's not, oh, big volume, I suddenly take a position, but it's confirmation. You use it in addition to other things you're already looking at. It's not enough reason by itself, but it's the colors don't matter. The red and green and all that crap. If you go back and look at the peak back in 2017, look at this. Massive green bars. You're telling me that you wanted to be bullish just because it was green right before it topped and went into a 12-month bear cycle? I don't think so. So much misinformation out there with trading. Or how about this one? Huge green bar. Did you want to be longing 69,000 before it fell to 52,000? Probably not. All right. So watch the well-known and accepted levels. The 50-day and the 200-day are well-known and accepted levels. The horizontal levels are, those are levels that all traders are looking at, investors are looking at, institutions are looking at. And the 19-week, I don't think the 19-week is necessarily a quote-unquote accepted level. I think 21-week is fairly common. I just tweaked a little bit several years ago because 19 seemed to work a little bit better for cryptocurrency. But again, they're just general guidelines anyway. So if you like 19, use 19. If you use 21, use 21. Whatever floats your boat. All right. just make sure that you're not doing something completely off the wall that nobody else is looking at, because you can put any moving average on a chart, and given enough time, within reason, you're probably going to, start to imagine that it's an important level just because it's going to be touched at some point in time. It's just, inevitable. So anyway, I'll wrap the video up there. The key takeaways, this chart's still looking exactly like we would expect. Came down and retested this level. This chart looks exactly like expected, comes down and tested this level, which means this could have been, not guaranteed, but could have been the disbelief dump, right? Which is what happens over here. It starts to dump. And then we could be, if we can take out these levels back here, looking at the hope cycle of a bull run, which means we're just getting started if that's the case. But watch those important levels, because there's no guarantee that that is what it is, A, and B, there's no guarantee that this dump is done. This could very well come up and retest these levels and then go down further. For example, on this USD chart, it could go down and start looking through this range back here. That'd be totally normal. Or even this range back here around 30K would also be normal. And none of those things would be, long-term bearish for Bitcoin. They could actually be bullish as they allow more people to get on the bus. The one thing to think about it for long-term investors, the more people have an opportunity to participate in the market, the better, right? That's a healthy market. Corrections are healthy because they allow new market participants to join the bus, right? More people on the bus, more gas money. More gas money, the further that bus can go. All right, I'll go ahead and wrap up there. Please remember, I'm some guy sitting in a spare bedroom. It means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed this video, give it a thumbs up. Make sure to subscribe to the channel. Leave me a comment. Let me know what you think. And as always, please remember, trade safe.